This is CNBC's live blog covering Asia-Pacific markets. Asia-Pacific markets fell Tuesday ahead of central bank monetary policy decisions from the Bank of Japan and the Reserve Bank of Australia. All eyes will be on the BOJ amid expectations that the central bank could end its negative interest rate policy after 17 years. Economists polled by Reuters expect the central bank to raise its rates to 0% from the current -0.1%. Japan's Nikkei 225 opened 0.5% lower, still below the 40,000 level. The broader Topix traded near the flat line. Separately, the RBA is forecast to hold its benchmark interest rate at 4.35% for its third meeting in a row. The S&P/ASX 200 edged 0.1% higher. South Korea's Kospi fell 0.8%, while the small-cap Kosdaq inched 0.4% down. Futures for Hong Kong's Hang Seng Index stood at 16,680, also pointing to a weaker open compared with the HSI's close of 16,737.12. Overnight in the U.S., all three major indexes rebounded as tech companies gained, while investors awaited monetary policy guidance from the Federal Reserve. Nvidia shares rose 0.7% on the first day of the company's GTC Conference, where the chipmaker is expected to showcase its latest inroads in artificial intelligence. Shares of Alphabet ended 4.6% higher after Bloomberg News reported that Apple was in talks with Google to include the company's Gemini AI in iPhones. The Dow Jones Industrial Average rose 0.2%, while the S&P 500 gained 0.63%. The Nasdaq Composite climbed 0.82%. CNBC's Lisa Kailai Han and Brian Evans contributed to this report. Japan's finance minister, Shunichi Suzuki, said this year's wage talks have produced big pay hikes because Japan is experiencing positive signs in the economy, according to a Reuters report. Last week, initial estimates from Japan's largest union, Rengo, indicated that major firms had agreed to a pay increase of 5.28%. The highest in 33 years. The government will deploy various policies so that positive momentum in wage growth will continue, Suzuki told reporters, according to the Reuters report. Reuters, Lim Hui JieRaising interest rates would show that the Japanese economic recovery is sustainable, Jesper Koll, expert director at financial services firm Monex Group, said on CNBC's Squawk Box Asia. The Japanese economy is being taken out of the emergency room and starting to walk on its own, he said. As investors prepare for the Bank of Japan to raise its benchmark interest rates, Koll warned that if the BOJ keeps the status quo today, it will be disappointing in many different ways. As concerns swirl about lofty stock market valuations and investors focus on AI companies, strategists at Berenberg see one sector as a relative bargain. The investment bank pointed out that investors in that one sector outperformed the market by an average of 108% or more than doubled their money when they invested on 3 occasions in the past when valuations were similarly depressed as the current levels.